Hello everybody, we'll get started with the webinar this time. My name is Troy, I'm a Senior Account Manager with AvaTrade. I'll be leading the session. Before we get going with some fundamental analysis, let's do a quick systems check on the chart, or on the system I should say. If you're hearing me clearly and seeing my screen all right, just type OK. All right, great, I've got enough responses, looks like we're up and running fine. All right, so kind of the general consensus here today is with the fundamental news, a bit of stress on the markets, with the typical suspects leading the way with the driving stories, China and the U.S. So we'll have a look at what's going on there, and then we'll get onto the charts and do some maybe fundamentally guided technical analysis to see what opportunities are there for you maybe moving forward through the day. As we get going, keep in mind all investments have risk. No one trade is guaranteed to have profits. I think we all understand that, but you know, the whole reason we're here is that certainly each trade does have the potential for nice profits, and you just want to manage your risk in a way that makes sense for you. You can read our full risk disclosure statement on AvaTrade's main website. What we cover today really should be looked at from an educational perspective and not taken as financial advisement per se. And so as we go through some concepts and some ideas, it should be adding tools to your tool belt, so to speak, to help you either improve upon or start to develop a new trading strategy that hopefully in the end brings you better P&L at the end of the week, the end of the month, etc. Now, in terms of fundamental analysis, there really are two main types of fundamental news that can help you decide how you'd like to trade. Okay, and one type is maybe easier to predict in terms of timing and scope. That would be what we call regular economic events, and we'll take a look at some today, especially with Great Britain. There were a number of regular economic events today that we'll take a look at, and certainly that could help you have a preference as to which way you want to find entry points and trust to open positions with those involving the Great Britain pound. Okay, and then the other type of economic event or economic news in terms of fundamental news is what we refer to as extraordinary economic news. Okay, and this extraordinary news doesn't have a scheduled time for when it will come out, or a topic that you can count on will be in the breaking headlines. So this extraordinary news is stuff like breaking news about coronavirus, breaking news about US-China trade relations, breaking news about Brexit, etc. And so these types of headlines and fundamental news stories just can't be predicted for sure what the topics will be about or when they'll be. And this type of extraordinary fundamental news you can account for in your trading strategy, even though you don't know what the news will be or exactly when it will come. You still can account for it with your risk management setup, with your potential opportunity setup, with pending orders, etc. Okay, and we'll talk about that as we go through some examples. And by the way, as we go through, please feel free to interrupt with questions or with comments, with input, something you want to share maybe with the rest of the attendees at any time. I have someone saying they can't hear. Let me just type real quick. Okay. Now let's go ahead and let's go to what is the latest fundamental news. Now, before we jump into the news, one thing to keep in mind is there are different ways to manage your risk with AvaTrade. One obviously is with your trade sizes, using a stop loss, maybe preparing pending trades to act as hedges to your primary moves. So there are different ways of managing this risk. And yeah, I apologize if there's some background noise. I'm pretty near the trading floor, and so there is some noise in the background, but hopefully you can still hear me clearly. Now, so there are different ways to manage your risk, all right? And this risk management also has another tool if you're using the AvaGo mobile app, the AvaTrade Go mobile app. Now, if you look here on our website under trading platforms, you'll see AvaTrade Go is here, all right? And that's a mobile app that was created by AvaTrade, and you can see some of the features by scrolling through it on our website. And one of the features I wanted to mention was AvaProtect, which is something that allows you to protect a trade against losses for defined time periods. And no matter how much you might lose, or no matter how bad it might go the wrong way during a defined time period, during that period of coverage, once that coverage period ends, any negative floating is added to your account, and the trade can keep running. Or you can close it off during the covered time period and collect any negative that was showing as a payment from this protection. Okay, and so you just have a small premium cost. You can pick different time frames of coverage by the hour, by the day, etc. And it's available on all of the FX pairings, gold and silver, and more assets to come. Okay, so check that out. If you don't have the AvaGo mobile app, I suggest you get it. There are other nice features as well on it, such as calculating your margin requirement, which you see here. It's showing margin that will be required to open that trade size. And also, if you program take profit or stop loss, it'll tell you in your account currency how much you're risking, how much your potential profit would be, etc. So it does a lot for you that the standard MT4 platform doesn't do, but this will place trades on the MT4, MT5 platform through the mobile app with all of these extra features and tools. All right, so as we look at the fundamental news for today, we see kind of a mixed bag in terms of the futures. Okay, US market will be opening in about an hour and a half, and we see the S&P 500 is slightly green, NASDAQ is slightly red, and the VIX index, which is the volatility index, which some people refer to as the fear index, is kind of flat. It's a little bit red, meaning fear is dipped down a little bit. Earlier today it was green, so it's been mixed up and down today with sentiment, kind of ranging from slightly fear-based and then slightly coming out of that volatility, and we see the volatility index actually slightly red now, meaning fear is dropping a bit compared to earlier today. So it's bouncing around, which really, if you look at the technical analysis, creates opportunities in both directions, since there's not a huge driving force fundamentally in one direction or the other. It's kind of mixed, little green, little red, not overwhelmingly moving in one direction in terms of volatility. Okay, and so I've been able to cut off some of the background noise, by the way, so I hope it's gotten a little bit better. Now, as we look at some of the big headlines, we can see here's an article about what's happening with China. They're not happy with Hong Kong. They're starting to do some cracking down there, and they're worried that the US will back what Hong Kong is wanting to do, because the US views Hong Kong as more of a free market and kind of separate from the rest of China, and China views Hong Kong as part of China. And so there are some tensions arising there. And earlier in the day, it was really raising fear on the markets, and it seems to have calmed down a bit now. And if we go to another article, futures retreat as Sino-US tensions simmer, same thing. It's talking about China, US tensions. So that was there today. That really was one of the main driving stories. And then we can also look at what announcements came out today. And we see some really bad announcements for the pound. Okay, and we can refresh that, see if anything new has come in. We've got some US announcements, Canadian announcements coming up a little bit later today. Okay, and so this is really the big fundamental news so far in terms of economic announcements. Really bad news out of Great Britain. Okay, so you might be looking for opportunities to short the pound based on these really bad numbers on retail sales, public sector net borrowing, core retail sales, etc. It was already expected to be bad. These were the expectations here, really bad, and they came in even worse than really bad. Okay, so that's not necessarily good news for the pound. Any suggestions on what we might want to pair the pound against if you're looking to short the pound? When there's some fear on the markets, what asset? Yeah, the yen. Good, Ebert. The yen tends to strengthen when there's fear on the markets. And while it's kind of mixed bag with fear, it's leaning more towards the negative sentiment with the headlines and everything rather than positive sentiment. So the yen is probably a little bit strong today, okay? Strengthening a bit. And so to pair that against something like Great Britain pound that had some really bad fundamental news today, that looks like maybe where you might go after some opportunities, something that might be a bit predictable throughout the rest of the day, okay? All right, good. So let's go ahead, let's take a look on the charts and see what's happening. Now, this is crude oil, which has been making a run of late, and it looks like after yesterday's drop-off, it's trying to recover back up. If we go to 1 hour candles, here we are. You see yesterday, it got up near 35, all right? One thing about oil, and you see a line I drew up here. This was from a prior session. That was where we were looking maybe to short oil from, and boy, that worked out to be perfect, okay? Why would we have said short oil as you got near 35? Let's go, you see this line up here, a little bit higher towards 35.5. Let's go to the 1 day candles and I'll show you. So here's where these lines correspond. You see this old gap, okay? The price of oil gapped down here. That was really when oil made its big run down, okay, a while back. This is back in February, moving out of February into March, okay? We see oil gap down like $8 and then continued its run to the market that we've known lately with oil being very low priced. And so as this recovery was occurring yesterday, we could see earlier in the week, and I think we drew these lines on Monday, this gap price, okay? It was an old gap down, and that was a level of significance that would act as resistance to go above into this gap to fill the gap back up. So once it reached this price, that was a spot where that gap was that you might sell from, expect a dip back down. And right on cue, as it reached that old gap price, it spiked down quite a bit, okay? We're talking nearly $5 drop, $4 plus drop, okay? And so this was very, very much predictable in terms of where that little bull run on oil was maybe going to pause. Peter, the rollover dates shouldn't really affect the price movement here, okay? When you roll over to a new contract price, because those contracts allow people to hold the trades longer, if the general view is oil should recover back up, the further out you go, then that's why those contract prices are higher. But no, that in and of itself wouldn't move the spot price, the overall price of oil up or down just because there was a rollover coming. On that old contract price, yeah, it might cause the old contract to drop as people leave it, right? But in general, the price movements we're seeing here, nothing to do with rollovers. It had, I believe, everything to do with reaching this old gap price, because right at that spot, again, we drew the line, I think Monday, that's where it dropped. Okay, it was very predictable. Now, you see it also was predictable. It dropped towards this old resistance level where there are also lines that we drew. And as it got near that old resistance level that once it broke above recently should become support, you see it dip back down near that and pop back up again. Okay, so now we're running in this zone right now. Okay, between this gap price and this old resistance, which now is support. So we're ranging between these two price levels for now on oil. So you can look for your technical entry points between these price levels if you believe it should continue ranging for a while. All right. I think it's going to have a hard time breaking through this price level up here around 35, 36. But once it does, once it starts to fill this gap, if you understand the technical strategy of trading the gap, once the price gets up into the gap, which I would say above this wick over here, you see the wick right here? Once it enters above that wick, it very easily could try to fill this entire gap back up towards this price level where it gapped down from. So right now it's respecting the gap on the bottom side and it popped down. What kind of pending order could you put up here in case it breaks through into the gap? To buy from somewhere up here above this gap open here from this Monday morning back then. Yeah, buy stop, good. Buy stop buys from a higher point. So just as earlier in the week we said a buy limit made sense just below this gap price, and those who did it would have had a nice $4 drop to profit from. It also makes sense that if it breaks into that gap, the potential, no guarantee, but the potential is there that if it breaks into this gap, it could fill it all the way to the top of that gap from the prior Friday. Okay, so there's an opportunity to think about as well, while also maybe pending orders down here off this support level to a buy limit pending order to buy off this support, and a sell limit to sell if it reaches this resistance again. And if it breaks through, you hit your stop loss and you get in on the buy stop. Okay, so there are a few ways you could trade that. It looks very opportunistic still, even if you missed this drop off of this old gap level. Now, we were talking about what was happening with the fear and things like that, the pound. So let's look at the Great Britain pound, maybe against the yen, and see what's happening with it today. Okay, let's go to 1 hour or 30-minute candles. You see what happened today with the pound. Okay, it's been dropping. So we see the support level here was broken. This was old resistance, breakthrough candle became support right here, support, exactly where the breakthrough was over here, and then boom, the support broke today. Why did the support break? We saw all those bad numbers. I just showed them to you. So back when those numbers came out, that's where the momentum came from to break this support. We go back 1, 2, 3, 4, 5, 6, 7 hours. Okay, we go back and look what was the time frame of those announcements. Okay, there's a relationship there. So the fundamental news clearly drove this broken support. And now you're thinking, okay, great. That would have been nice if I was paying attention earlier today. Hopefully some of you already traded on it. By the way, if you knew all those fundamental announcements were coming, you could have saw the calendar Friday, right? You could have put pending orders, a pending order, a sell stop pending order below this support level. Okay, this was back, and I don't mean Friday, I mean yesterday. This was back yesterday, the 21st. The movement was above this support level. So if you'd have looked at the economic calendar and saw, hey, tomorrow early in the day, there are some major announcements on the pound, fundamentally speaking, there was a reason why potentially there could be momentum to break the support. Okay, and so what you guys could have done, you guys and girls, I should say, you traders could have done was put a pending order, sell stop below this support yesterday, and waited for those announcements to come in. And if they were something worse than what was expected, then the support level likely would break and you'd already be in on it with your sell stop and you'd be sitting in profit now. Okay, so it's very nice to look at the economic calendar like we did after the fact and see, okay, the news is bad. Now I know which way I prefer to trade the rest of the day. But it's also nice to look at that economic calendar ahead of time for what's coming tomorrow or what's coming Monday, so that I can maybe get some pending orders in key locations before the announcements come, in case the pending orders are extremely bad or not pending order, in case the announcements are extremely bad or extremely good, then your pending orders will be activated right as the movement gets going, if you put them in strategic locations before the announcements hit. Now, let's say you didn't do that and you haven't taken advantage of this drop, and you're looking at this now and you're saying, okay, now what do I do? So this broken support right here, when it broke, should act as resistance. And we see it came up, it hit the resistance here and dropped. It respected it as resistance now, like you would expect. Why? Because the same reason it broke the support is the same reason it should respect the resistance now, because those bad numbers are there for the pound. So now what kind of pending order, if you want a more perfect entry point, let's say you wanted to short the pound now, what kind of pending order could you put up here instead of a sell stop, because the movement already occurred? What kind of pending order would you put up here to try and get a better entry point before you short the pound? That's the sell limit. Good. Some of you were mentioning sell limit before. That's the sell limit. Very good. So sell limit up here closer to this old support might make sense. If it comes up, you might expect then it to bounce back down off of that resistance level, because there's no positive economic news for the pound right now, only negative. So that could be an opportunity you might go after. You also have the idea where you could zoom in. Let's go like 5-minute candles, and we can look closer at what is this trend doing. And you might say, well, here's the resistance it formed now. Resistance, resistance, right along this line here. Okay, which is pretty close to that broken support. So depending on what trade size you take, how much you're willing to risk to your stop loss, etc., you might say, well, I don't need to wait for it to go closer to the resistance. You could do a market move and still get your stop loss up above that resistance level. Okay, it just means you have to risk a further distance on the chart to your stop loss, but then you eliminate the possibility that maybe it just drops now and you miss the opportunity, right? So there's a trade-off. You can get in on more opportunities if you are trying to be less perfect with your entry point. And if that's the case, but you still only want to risk the same amount as you would if you were being more perfect with your entry point, then you just take a smaller trade size. You sacrifice some of the potential profit to be able to get in more opportunities with the same percent exposure. Just simply take a smaller trade and you don't have to be so perfect with your entry. Okay, but that's up to each individual trader. You might be more patient, wait and see if you get closer to the resistance, or you might say, nah, I think it should drop further and get in now, right? And that's not for me to say what the right method is. There's more than one right method, to tell you the truth. So those are some opportunities though with the pound that I see. Now we could take a look what's happening with the Canadian against the yen. All right, the Canadian has climbed a bit. Why would the Canadian be climbing today? What is it that was recovering today a bit that has to do with Canada? What's the fundamental news that would help the Canadian overall climb maybe a bit today, whereas the pound dropped? Yeah, oil prices, right? Overall this week, oil's been bullish. It had a pullback yesterday, right? At a strategic location, we saw it was at an old gap price. It was a significant price level. It hit that price after climbing strong yesterday, and it dropped $3 or $4 per barrel, maybe even closer to $5. It pulled back. But overall, it's been bullish. And what's the number one export of Canada? The product that means the most to their GDP? Oil. Okay, so as oil prices go up, that tends to be good for the Canadian dollar. All right, so again, if you understand the fundamentals, and it's not always in a headline, sometimes you just need to know. Research the nation a little bit, whose currency you're trading on. And you just need to know sometimes, like Canada. Yeah, oil going up, you might go with the Canadian dollar more than going against it. Okay. And by the way, what do you think happens with the Australian dollar when there's tensions with China? Again, understanding relationships, fundamental relationships between currencies and countries. Yeah, the Australian dollar probably has had some bearish pressure on it today. Why? Well, you know, the number one buyer of Australian exports is China. And if there's tension in China with their economy, then that creates bearish pressure on the Australian dollar. Okay. And so, whereas we see the Canadian dollar has been bullish today, and it looks like it's retreated back maybe near what should be a support level right about here. Okay. Resistance, 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 resistance again, broke through today. And now it's just slightly above that. Okay. So it looks like there's an uptrend because the high points got higher and the low points have gotten higher. That's an uptrend. Okay. High point got higher than here. It broke this resistance. It may dip back down a bit, but overall, that's an uptrend on the Canadian dollar as we look at the 5-minute candles. If we go to Australian JPY, more flat. Okay, it's a bit more flat. When we look at it from a 1-hour candle perspective, it's down strongly. Okay, 1-hour candle, strong downtrend on the Australian JPY, to be expected. Yen should be strengthening when there's some fear on the market, some negative sentiment. Australian should be weakening when there's fears about China. And so there we go. Broke the support. That looks a lot like the Great Britain pound today. Okay, with how much it dropped. And so there has been some recovery in the past 4 hours or so, which actually maybe gives you an opportunistic entry point, because look here. Look where that stopped climbing just now. The last 4 hours or so, it came back up. Resistance, resistance, resistance. Look over here. That's the old support level. Support, support. Okay? You start to look at these price levels and you realize, wow, there's something to this. Not just the fundamentals, but the technicals. The technicals, let me step back. The fundamentals help you pick the direction you might want. The technicals help you pick your entry point. Look exactly where this pullback stopped. This is where you sell from if you think the Australian dollar has bearish news. Why would I wait and sell from here? Because that's the old support level. That should be resistance now. Look at it drop. That would be a good market move, technically speaking, to sell for them. Put your stop loss where if you sold on this. If you're going with the negative fundamental news for Australia today because of bad news and tensions in China, and you're selling here on the Australian JPY as it's bouncing down off the resistance, where might you put your stop loss? Yeah, Peter, I'm with you, just above the resistance. So my stop loss is going to be up here somewhere. Because if this truly is a bearish day for the Australian dollar, and if that resistance level really means something, it shouldn't break much above that resistance level before dropping, right? Now, it's up to you. How much leeway do you give yourself, right? Sometimes it'll spike just above the resistance before it goes down, right? And then if you have your stop loss too close, you miss out. You take that small loss, and then it goes the right way. So you want to give yourself enough leeway that your stop loss isn't too close, okay? Every trader is different in terms of how much they were willing to expose to their stop loss, but you want to have it far enough above the resistance that you don't get caught on that little false move. But you can see just while we've been talking, we caught it at just the right spot. Look at the 1-minute candles. Just while we're talking, it's dropping, okay? And so we see that resistance level, and it actually, it looks pretty perfect where it was sitting just 5 minutes ago. And even now, it's not a bad entry if you trust that resistance level, right? And the fundamental news that goes with it. And not every time, but more times than not, when you align the fundamental news like we're doing with a good technical entry point like we see there, the result is what you're seeing right now. At least in the short term, you'll see resistance levels, support levels respected more often. Not every time, certainly, but more often. Enough to improve your P&L numbers to maybe go from losing slightly to making a nice profit potentially. Okay, and that's all it takes is have that little bit of an edge to line up that fundamental news with your technical analysis, and now all of a sudden you have less breakthroughs in the wrong direction, better bounces, better reversals, etc. Okay. Someone's asking a question, so I'm going to read it here. It's a little bit long. Give me a second. Okay, someone's asking if there's a gap and you have a buy stop or a sell stop prepared. So I would be careful carrying trades over the weekend with assets that you think have a potential to have a large gap. Okay. When I said you could prepare a pending order, like if you know there are announcements on the pound tomorrow, or since it's Friday, I'll say Monday, you're preparing that pending orders based on the idea that the news won't come until those announcements come, right? And sometimes if you carry those pending orders through a weekend rather than just from Wednesday to Thursday or Thursday to Friday, there's more opportunity for breaking news that's unexpected that could cause a gap on the asset. And the assets where we've really seen large gaps and big news through the weekends have been oil, gold, indices. Okay, those really have had the highest potential of late for large gaps coming from Friday's close to Monday morning's open. If you have a pending order, a gap will never work in your favor. Okay, if it gaps past your entry and that further price past your entry is negative for you, then it's going to give you that worse entry point because of the gap. If the gap worked in your favor, it's going to give you the price you wanted, not the gap that went further in your favor. So this is the rules with all limit and stop orders. Okay, and so any pending orders, if you anticipate there could be huge gapping or large gapping, wait until the market opens, then place your pending orders on Monday. Carrying pending orders through the weekend, if there's a large gap, will never work in your favor. Just keep that in mind. You're better off waiting if you anticipate potential large gaps. Boy, and this is really dropping nice off that support level, or resistance level, I should say, the old support that was broken. Okay, good question, by the way. Something everybody should understand. Emmanuel, yeah, I wish you would have listened earlier, but I'm glad you're seeing that it would be helpful. And wow, look at that dropping right off the resistance for the last 20 minutes, straight off the resistance level. Really nice. And you can see when I'm looking at 5-minute candles, I can't see the old support level so good over here. But when I look at 1-hour candles, wow, it becomes real clear. Why did this drop so clearly from that spot? Look, way back here on the 1-hour candles, that was the old support level. It came to that spot and dropped like a rock, right? Okay, typically your stop loss is going to be back to the other side of the resistance. In this case, it would have been back up here if you were selling. Okay, and if you're asking where would I take my profit, if I'm a scalper, I would take my profit at the first support level right around here. Okay, support, bounced up, hit the resistance, it's dropping. If it gets near my first support level, I might take profit. And others might have already taken profit, by the way. Sometimes if you're scalping, you trust the resistance will cause that the movement to bounce down, but not necessarily all the way to the next support. So after it's bounced maybe halfway towards the next support, sometimes people will take profit there. They don't wait for it to go all the way to the next support level. So this is up to each individual trader. And by the way, you can do a partial close as well. You don't have to close the whole position. So if I was trading one lot, let's say sell off this resistance, and it dropped, I don't know, 15 pips, whatever, I say, okay, that's a nice profit. I can go in, close half of it, and leave half open, and have my take profit for the other half down here. I'll show you how to do that, by the way. Here's Australia and JPY. Let's do one lot, and I sell. Okay, let's say I'm in profit. And I say, okay, I want to close half my trade or a third of my trade. So I go to modify or delete. I go from modify order to market execution. And then you see one lot, that's the size of the trade that's open right now. I can change it to the amount I want to close. So let's say it's 3/4 of the way towards the support. And I say, okay, I want to close 3/4 of my trade. So I put the amount I want to close, and I don't hit sell or buy, I hit close. And it tells me I'm about to close 0.75 of this order. Okay, there we go. Now it left open 0.25. I closed the amount I wanted. Okay, that would preserve all the profit from where I first entered down to where I closed, 3/4 of it. Now I'm guaranteed a profit, even if the quarter of the amount that's left went up and hit my stop loss. And I can wait it out for the rest of it to see if it'll hit my take profit down here. Okay, so you have different options of when you'd get in, when you'd get out, where you'd put your stop loss. But in general, stop losses tend to be beyond a support or a resistance level, or two, by the way, or two. You can go beyond depending on how patient you want to be with the move and if you're a short-term trader or long-term. On my longer moves, if I was looking like to take a profit rather than on this first support level, if I thought this should drop all the way down here to this larger support level, if I was waiting for a longer move, I might have my stop loss not just above one resistance level, but I might put my stop loss above 2 or 3 resistance levels up here. So that way, if it just tests the one, I'm still in. It would have to go all the way up and be a more significant move and break 2 or 3 resistance levels, then I would get out, right? So there are different ways you go about it depending on, are you scalping short-term moves or are you doing longer-term moves with longer potential profits? In which case you might be willing to risk a bit more distance to your stop loss as well. Okay. Peter, you could move your stop loss to break even, but you don't necessarily have to do that. Keep in mind, the more you keep moving your stop loss closer as you get further into profit, the more likely it is to cut itself off early before it realizes even more profit. So yeah, you preserve profit that way, but sometimes by sliding that stop loss into a profit location, you preserve profit, but you also sometimes prevent it because maybe it was going to dip down there, back down to even near zero on your PL before it went even further in the profit, and now you cut it off early. So sometimes it works against you as well sometimes if you slide your stop loss too close to the current movement, okay? And you see this one working nicely as we expected, okay? And it's about 50% towards the next support level, and that's a spot a lot of times where people will take profit. And so you can see the power of fundamental news combined with your technical analysis. The pound was dropping as expected. The Australian dollar is dropping as expected. We pair it against the yen because we know that the sentiment was slightly negative today with fear up a little bit about US-China, and it just makes for more predictable movements, okay? All right, so maybe we look at some indices. FTSE, okay? 1 hour candles, we see some recovery today after initial fear, after initial dropping. So you might be looking for entry points. If you think there's still reason for the markets to drop a bit, then you might be looking, okay, where's my next resistance level? And I can tell you where the resistance level is. It's right where this dropped from. You see right there? This was support, 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 breakthrough. Predictably, it pulled back, hit this old support, which should be resistance, and down it comes, right? This is just like the Australian JPY we were looking at, only it didn't drop yet as much. So the next support level is down, whoops, clicked the wrong spot. There we are. The next support level, if it's going to continue dropping, is down here. Okay, you've got all this distance to the first support level here. So stop loss could be above the resistance, going with the somewhat negative sentiment today to go potentially to the next support level. Okay, and I bet the other indices look similar. Let me fix my view. I accidentally closed my market watch. There it is. Okay, so we could look at the Nikkei. It looks the same, right? Drop off today, pull back, reaching some resistance and starting to drop. We could look at the Dow Jones. Looks the same, dropping through the early part of the day, recovery, and now reaching some resistance. Okay, so you've got some opportunities here to go with some of these assets that earlier moved with the negative sentiment, have pulled back to where they were before the dropping, and now you get a second shot to reevaluate and see what do you want to do to go after some of these potential moves. Just keep in mind as we get near the end of the trading day, holding these positions through the weekend, if there's big news, you could get some gapping. coming out of the weekend. So opening now and closing before the end of the trading today might make a lot of sense on assets like indices, oil, gold, etc. Okay, rather than risking the unknown type of fundamental news that could break at any time, Saturday, Sunday, etc. Okay, all right, everybody, I think that we'll cut it off here. We've got an idea of what the market has done. Equities have dropped a bit through the day, pulled back up, recovered a little. There's still some negative sentiment on the markets. We saw some potential opportunities already making their move as we watched it and predicted it, which is nice to see, and maybe some more to come here. So good luck with any moves you make today, and we'll be back at it again Monday later in the day. I'll do a session 6 GMT time on Monday. Okay. All right. Till then, good luck with your trading. Bye for now.